surviving 10 years of living with cancer. And I invite all of those people with that landmark to join me in ringing the bell. You have to get up. You have two choices. You can lie down and give up, or you get up. And if you get up, we're going to fight. Okay, welcome everybody to the Jack Ostroff Hope podcast. Story about my cancer journey, but also about financial planning as one of the issues that I had to deal with once I got out of the hospital. And so we've had 5 financial podcasts that we've included in addition to sort of the medical issues I dealt with. And I've invited my good friend Derek Novus, is CPA-CA, who's an former tax partner international tax partner at KPMG. And Derek is one of the brightest guys I've ever met. I mean, just absolutely brilliant. And that's not coming from me. That's coming from people that we've worked with who come and tell me that Derek is not only exceptionally bright, but like just an outstanding business person. And combining those two attributes is very unusual. So he's been an amazing friend. We met back in my General Mills days. This is when I was assistant treasurer, and I think you were the manager on the account, tax manager on the account, and he bailed me out back then, and he's been bailing me out for 40 years since then. So I owe him a big thank you all the way through, and a thank you for doing this podcast. Today we're going to discuss issues regarding tax planning for deemed disposition upon death. Unfortunately, we're all going to face these issues. We've talked about my journey, but Derek's got his own journey. He is facing surgery coming up on October the 27th, which is the upcoming Monday, regarding your hip replacement and an issue in respect to your femur, I believe.
Right.
So are you prepared?
Not as well as you can be for a mental attitude. But, sort of in preparing for this podcast, some of the items sort of helped me focus and I think sort of get ready.
And from my perspective, I told him his biggest responsibility is to show up on the Monday. After that, he's in the hands of some really qualified surgeons, and I'm sure he's going to do terrifically well. But so despite his very busy schedule, he's carved out some time to talk to you and give you some ideas here in terms of issues that you could be facing or will be facing regarding from a tax perspective. And since my tax knowledge is extremely limited because I've never practiced in tax, which has been a good thing for the majority at large, and more importantly, I defer to Derek for all my tax-related issues. Derek, take it away. Tell them what they need to know.
Well, Jack, thanks for those kind words. And what I want to say about you is watching you and living with you basically through your journey, you've been nothing less than heroic and an inspiration to so many people. So, with the surgery, I've also had to face thinking about all the issues that could arise in the future. And let's go through sort of 3 or 4 areas that I want to touch on today. The first one would be tax planning for the deemed disposition of assets on death. Now, in my case, I have a spouse, and I'm leaving all of my assets to her. So this deemed sale on death, which could create a gain subject to tax, will not arise in my situation. So if you have a spouse and you're leaving your assets to her, this should not be an issue. If you do not have a spouse and you can't get one quickly, then you have to think about how you reduce the incidence on this tax through issues such as estate freezing, which I believe was discussed in a previous session, or sort of gifting or donation sort of strategy as well. The other thing that is really relevant is you have U.S. property, because the rules there are pretty insidious, that they don't tax the gain, they tax the actual value of the asset. So even though you might have bought an asset for $1 million and hasn't grown, you could still be subject to U.S. estate tax. So you need to get specialized advice if you've got any U.S. citus assets, such as U.S. property, U.S. stock, and also, funny enough, loans to U.S. residence. So the second area, it would concern individuals who may have trusts or businesses. If you have a business, you have to consider any shareholder agreements, whether you're forced to sell or not. Hopefully, the shareholder agreement will allow you to pass the shares on to your spouse. If not, there's going to be an issue, once again, with the capital gain on your disposition of your shareholder interest in your company. If business is sold and you're forced to take the off-tax proceeds and invest, you need to really think about how you're going to take the money out of your company. The company has got refundable taxes, so you may be able to take the money out of your company without much incremental tax if the company gets a refund from paying you and you pay the tax. So you may be able to move money out of your company on a tax-efficient basis, depending on how much refundable tax is in the company. Finally, let's talk about cash flow. Obviously, you need to ensure you have sufficient funds to pay off any taxes that may arise, and also to fund your spouse's living standards. You need to investigate sources of funds that may be available to you besides cash maybe from your company, if you have one. And these would include death and survivor benefits available on death. There are some CPP also pays out survivor benefits, which most people aren't aware of. So you need to look in that. An example of a survivor benefit would be, let's say your wife is 65 and not receiving benefits, she would actually get 60% of your benefits, which is could be very significant. But you do need to apply for CPP benefits and survivor benefits through Canada Services. I don't remember the full name of it. Anyway, I think it's Canada Services. There are other ways to avoid what's known as probate fees by using quite sophisticated concepts such as alter ego trusts, which I think any lawyer can explain to you. And that may avoid any probate fees which arise on death. Jack, has probate fees been discussed in earlier discussions?
We've discussed probate fees before in wills and estates, so I think we're good with that. One thing I'd like to do is go back with something I said before. Tax is not I'm a financial professional, supposedly. My tax knowledge, quite frankly, is limited. So a lot of what Derek has talked to me about, or what we're talking about now, are issues that I really have to think about and further probably investigate more or have more discussions about. So if you are like me and you're a little lost in the woods here, it's not surprising. So firstly, I would say, as I have mentioned with all my financial podcasts, is the necessity for a financial professional. And I put this in the context of the following. There is a reason why organizations hire Derek Novices of the world. When they come to buying companies, making major decisions, the tax consequences of these investments that they're making can be huge. There are various avenues to take advantage of. And the consequence of good tax advice is extreme. It can be very material. And in the context of a large company, that's millions and millions of dollars. But even as in the context of an individual, consider you're paying fees for a couple of hours, perhaps. That's going to be really small relative to the potential savings. But you can realize by organizing your affairs properly. In addition to which, your returns or your savings are generally annuities. Organize your affairs properly, your savings can happen on an annual basis. So take the occasion where you're spending $2,000 in fees, save $5,000 in taxes in year one. You're going to save that $5,000 in year 2, 3, 4, and growing. So the annuitized value of $5,000 could be, let's call it $50,000. I'm just going to throw out a round number, but you spent 2. Look at the return. Now, it's not always going to be that, but the point being, protect your interests, do your homework, engage professionals that can help you. Derek, can we talk about some of the issues that I dealt with, and I know that all these people listening are going to have to deal with when, I got out of the hospital and I started to think I better organize all my affairs. I had to go back and start looking at decisions regarding RSPs, TFSAs, IPPs. I mean, all the basic things, even capital gains and what do I realize, when do I realize it, so on. What are the order that people should be looking at? Do they maximize all of these advantages? The TFSAs, should they load up on them? What are the sort of the basics that people should be looking at from a tax perspective?
In terms of continuing your lifespan, it should be business as usual, and the same decisions should be made. With one sort of caveat, in terms of an RSP contribution, I would want to make sure that the tax rate on my deduction is certainly going to be greater or equal to the tax I'm going to pay when it comes out. Because if I'm going to pay more tax when it comes out, then when I'm getting relief going in, I may consider not using an RSP contribution. Obviously, on death, the RSP, provided your wife's a beneficiary, designated as such, is a tax-free rollover. In terms of the TFSA, the analysis is different because you might as well get the benefit of tax-free compounding.
Right. Load up.
And there's no cost coming out.
Make sure you're up to date.
Exactly.
And I was behind, and so that was one of the things that I did, was make sure I was up to date and contribute on an annual basis throughout the years. And that's one of the few gimmies that are out there, as far as I'm concerned. There aren't that many, so from that perspective, make sure you're up to date on your TFSAs, both for you and your spouse. And include your spouse in all of these discussions as well. I mean, granted, these are complex issues even for me to understand, but not to address it and not to be involved and not to have your spouse involved, because when it comes down to it, when there's an issue or a question, it's nice to have a resource to go to. I mean, for Shauna, that's great. She can pick up the phone. And she, Derek and I go way back, so and so does Shauna now. But you need that person in your life. Who's that financial professional that you can speak to? And your spouse should be aware of who that is and feel comfortable in talking to them.
Jack, I can relate to that because one of my issues with the surgery is obviously my wife's got a huge anxiety levels. So you want to sort of try reduce anxiety levels on the financial side. So for example, if you have investments in your own name, you need to tell the bank or financial institution that you're giving a power of attorney to your wife, so there's no problems in transition from you to her. And she needs to know, she needs to have a listing of all the advisors, all the contact details with the insurance agent and who all the financial advisors are. A listing of that will take away a lot of this anxiety.
And this is something we talked about in Wills and Estates, is to have a financial map. A listing of your financial assets that is current as possible. What is it that you have? Which institutions? What's the type of instruments that you have? Having that in front of you gives you a good sense of where you are financially, and is very helpful to your spouse or partner to understand, here's the big picture. I don't need to know all the particulars or be an expert in it, but at least I can hand it over to somebody else so they can help me through the process. Yeah. And so, having a map, having a listing of your assets, generally what I do is have a front page where I, put it on an Excel spreadsheet, here's the asset, here's the dollar amount, here's the return, sort of thing. But behind that, I take a print from, the institution that I'm working with of current vintage, that shows that the asset is being there's the account number, there's the dollar amount. It may not be, the timing may be off a little bit, not that relevant, but more important that you have a map that somebody else can follow So now you can begin to get good and timely advice. There's no magic to this. I mean, the magic happens by picking up the phone and organizing a meeting with your financial professional. You don't understand. I don't understand. I need the help. That much I understand. So that much we can do is take initiative to get the help that you need. And certainly tax is one of those areas where you spend a little, you can save an awful lot of money. It will help you immensely going forward. So, there's a hesitancy to spend on professionals. I don't really understand why, especially in context of the returns that you can engineer as a result of getting proper advice. And doing this on your own and not going down the right path can cost you a lot of money. So,
Jackson, in terms of this financial roadmap that you're talking about, what are you doing with your passwords?
Oh, now there's a real challenge for me, because what I do is I generally use the same ones, and then I'm good until the system asks me to change it to something else. So I have a file that I put my passwords in, and then Lord knows if I can ever keep them up to date. So I am challenged in terms of that. What recommendations do you have?
Oh, I've got it in a sort of special drawer, and I update them, and hopefully my wife knows where it is in that drawer.
Aha, sounds like my safety deposit key. I know where it is. We do have a file. We have a safety deposit box that has our wills, which is really important. And and I do, when I log on, to like EasyWeb, let's say, and to the financial institutions that we work with, I ask my wife to sit with me, give her the passwords, hope that she writes them down, hope that I haven't changed them in the interim. But that's a really big challenge. And so maybe it's a good time to refresh, to, sit down again, check your passwords, make sure your spouse has something current, or conversely updates to something new that you both can have and agree upon, and keep that one for a while. It's a challenge. I find that to be the biggest one. I know there's a technical answer to this. And so for those of you who do have it, kindly contact us. We'd be happy to post something that people can understand. But I do know it's a challenge to keep it straight for myself, never mind to make sure that Sean has got it. So putting in the drawer is a good way. If you can keep that drawer current is another challenge, right? So, from my perspective, I know that we can speak to Derek for the next hour, and he can go on all sorts of tangents and have some really important information that unfortunately most of us will not understand. But I think what you could get from today is the fact that there is a lot of complexity in tax. Important to be current, to understand the complexities, and that you need somebody with precise experience for, in this area, someone who has worked at typically, a large firm where they've gotten that exposure and experience. There's no shortcut to getting that. So I encourage you to, as with everything else, to keep that, in context of your financial affairs, is engaging financial professionals to help you in your journey. Now, I must say, this is applicable to all the work that we've done on the financial side, that the content of the podcast is for informational purposes only and is not intended for financial, tax, or legal advice. The views and the opinions expressed are those of the hosts and the guests, and are based on general information that may or may not be applicable to your specific situation. Always consult with a qualified professional, tax advisor, or attorney before making any decisions related to your retirement planning, taxes, or legal matters. The host and producer of this podcast do not accept any responsibility for any actions taken on behalf of the information provided. Firstly, I want to thank Derek for taking time out of his busy day. I also want to wish you, a lot of success on the Monday, that you'll come through this with flying colors and resume good health. But as you can tell, irrespective of who you are, this issue in terms of financial planning and taxes and estates and insurance and IPPs and investments, they apply to all of us. And you're well served by, complementing your knowledge with other financial professionals. Derek, thank you for taking time out from your day. I'm looking forward to, your speedy recovery. And hopefully we'll get to hang out. We'll do a little walks around, a few laps around the hospital. I've done that. He's done that with me, so I have to return the favor. But I wish him a speedy recovery. And I thank you for tuning in. Wish you all good health. And also a reminder that at the bottom of the screen, you'll find links for contributions to, charitable donations to Kidney Cancer Canada, to Princess Margaret Hospital Foundation for Cancer Research. Donate to the best of your ability. It's always appreciated. You're helping yourself, but it may not help you directly in terms of, it takes time for that research, but you're doing it for your friends and your family, and that's always a good investment.
Jack, I would say that in closing for me, it's, as important it is to transfer knowledge in terms of these affairs of tax, finance, etc. What's equally and maybe more important is transferring the values that you have to the next generation. And Jack's done a wonderful job in terms of transferring values and strength to the next generation. So we should remember in context that strategies are important, but values are probably more important. And you've done a wonderful job.
Amen. Well, you know what? I tell you, we go way back. We go back to my General Mills days when I was assistant treasurer at General Mills. You were a tax manager, and boy, Derek saved my ass. I was kind of lost there on the tax side, we became good friends, and you know what? It's a blessing to have friends like Derek. I appreciate all my friends and all my family. I've had wonderful support throughout the years, and I wish the same for you and your family. And that's probably the most important thing to really appreciate all of that. I wish you all good health, and I thank you for listening. And a big thank you for Derek for taking this time out from his very busy schedule. Everybody, be well. Take care. Bye for now.